So a new report by the British think tank Resolution Foundation found that millennials are on track to be the first ever generation to record lower lifetime earnings than their parents. Surprised or not?
You know, I'm not really too surprised, to be honest. I feel like the benefits are probably increasing over time, you know, and you know, you look at companies like Google now where they have all that dry cleaning and food in place. It's like, I don't think
they had that
counts.
before though. Aerospace companies have had that for years. I mean, everybody thinks that Google and Intel and Facebook brought all this creative workspace. It's not the case. If you looked at General Dynamics, Hughes, the Aerospace Corporation, Spay Wars, I mean, any of the Tomahawk missile we had a big aerospace industry in this country from about 1975 until about 1995. At the end of the Cold War is when all of that sort of went away. But, you know, when you used to drive around towns, for example, in Southern California, if you lived anywhere near south of Los Angeles called Manhattan Beach, or El Segundo, where they had all those aerospace companies. Here in San Diego, we had Hughes and General Dynamics. You saw these big softball fields. They would be called CRAs. They were called Company Recreation Associations. So they had sort of that stuff out there. The difference is, I will tell you what I think the difference is. Kyle, you'll remember this. Profit margins between 1970 and 1995 were about 12 to 15%. Okay? Profit margins today are 4 to 6%. That's the difference.
Yeah,
that's the difference. Because if
agreed,
and because of the way our society works, if a company dare made a profit over 8%, they're greedy.
It's a sin,
right?
Oh, definitely.
And that's what you're fighting with as a financial advisor. Is that you want to see earnings, you want to see revenue, and earnings is what's going to drive EBITDA. And, and that's the big issue here. So with respect to that, I guess the technology companies is probably the way to go because it's got the least. It's the least path of resistance to earnings. Okay, not necessarily revenue maybe, but earnings are going to be higher and stuff like that. Talk to us about the technology craze. I have a brokerage firm aside from my Schwab account and my Ameritrade account and my Scottrade account. I also have one called Interactive Brokers. Interactive Brokers is 100% online. I can't really even talk to anybody, which I'm not sure is a great thing, but it's all online. Is that where you're headed? Do you like that sort of thing or not?
Well, I mean, the one that I've been looking at in particular is called Robinhood.
What's Robinhood?
Robinhood is a new zero-charge transaction fee brokerage. They only make money based on the cash that you have unused in the investment accounts. Huge with millennials. So they just hit 1 million users. Average age is 28. But the most frightening number that I saw when I was researching this was only 25% of users have previous investment experience.
So they're just throwing their money at it, and who's investing it for them, and who's giving them the advice?
You do it yourself. So you go online and you say, oh, I want to buy Apple, and you buy Apple. No transaction costs. But I mean, I think it's just creating this idea that, oh, investing's easy, and what's going to happen is these millennials are going to go lose money investing and say, oh, stocks are risky, and be scared of it down the road.
How does Robinhood make money?
Yeah, how do they do that?
That's the big question. I mean, we've seen zero commission charge-based companies before. I believe Zecco or Mecco was one of them. I forget the name on that. That was in 2006, and they went out of business. I don't understand how this company can stay in business. They've gotten a ton of money in funding from other companies as well. But I mean, at some point, with net interest margins so low as well, you can't make that much of a profit off the unused cash. So I'm kind of confused on how the company will
Maybe
last.
it's just pure ad revenue.
Well, right? But are they advertising on their app?
I have not seen ad revenue. The way they said was just the unused cash, and they're looking at doing margin selling down the road as well to kind of generate some money. But I don't see how this company can last.
Well, I don't either, and that's the thing that scares me a little bit here is how this was like back in the .com era.
Oh yeah.
When if you had CurtisWarrington.com, we could go raise $10 million for whatever it was that you were trying to raise.
Didn't need to show a business plan.
You didn't need to show a business plan. You just need to have, we're going to let's just throw money into .coms here, and that's what happened. This is sort of the same thing here. A lot of these internet companies, there's only one revenue model for internet companies. It's advertising revenue, right? Unless you're subscribing or paying for something, through e-commerce or you're buying a newsletter, it's advertising.
Yeah.
When you're reading CNN Money, it's free. Why is it free? Because the more people that'll read it for free, the more people that look at all the pop-up ads that show up, right? That's the only model. So it would have to be that sort of thing.
Yeah.
Unless they're selling data. Now the data model is also very good. I know Price Patrol, our sponsor Price Patrol, who allows you to look up any item in stock. Well, actually, if you're looking for, let's say you're looking for a pair of sunglasses, you lost your sunglasses, you want to have sunglasses now, it'll tell you the cheapest place to buy those exact sunglasses within your proximity at a brick and mortar store. You can get them right now.
That's very cool.
So what happens? So it's great service for you. It's absolutely free for you. What are they really doing? They're selling that information to Oracle and Intel because now they know your patterns, right? This is all about data scraping.
Yeah.
So maybe that's what it is. Maybe it's about scraping data and finding that out.
Yeah.
Can I buy Japanese stocks or Canadian stocks off of Robinhood, or is it just U.S. equities?
Well, it's just U.S. equities, and that's kind of the interesting thing here is Nintendo saw a huge, search criteria on Robinhood, about 210,000 searches within a couple of days, again, only 1 million users, so that's a pretty high volume, and Nintendo isn't even listed on Robinhood because it is a foreign company.
Here's my question for you. So how is your quest in getting all of your friends to start investing going? Because when we first had you on the air with us, that was really the question, is that, can you convince your friends to do what your dad convinced you to do? And really that's basically throw away the instant gratification gene for a while and invest some money.
It is still
I mean, are you having to actually show them, hey, look, I'm not going to do this for much longer, but I'm going to tell you how much money I have versus how much money you have? I mean, is that like one way to do it and say, look, this is what I've been doing? I mean, how do you get them? Because it's a great idea, but I mean, how's it going?
And you got to be careful too, because you don't want to overstep some boundaries with your friends. You don't want to be too pushy with your friends. So I'm not pushy with my friends.
I never learned that.
It takes time. It takes time to build that trust.
Call up Chase Wilsey if you have a kid that needs to get his act together, because this man has his act together.
Sounds like it.
Wilsey Asset Management right there. You can get a hold of him right there. There's his dad. His dad's been on the program before.
His dad's got good hair too.
He does. He's got great hair. Nobody's got hair like you, though. Thank you, Chase. Appreciate it.